Good afternoon, ladies and gentlemen, and welcome to the First Property Group PLC AGM. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab just situated on the right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives today. However, the company review all questions submitted today and publish responses where it's appropriate to do so. I'd now like to hand over to Chairman Alistair Locke. Good afternoon.
Thank you very much, and thank you everybody for joining the meeting and participating. We're going to run the formal part of the meeting initially and go through the various resolutions. I will then make an AGM statement, and then we'll be happy to move on to question and answers thereafter. So, without further ado, I'd like to welcome everybody here for the AGM of the company. And all the shareholders who are watching via the live presentation. I'm Alistair Locke, I'm the group's chairman. I'll be chairing the meeting and I will introduce you to my colleagues. Peter Moon on my right, your left as you look at it, is my fellow non-executive director. Ben Habib is the chief executive. Laura James, our financial director. Jill Aubrey, who you may just be able to see, as our company secretary. And Jeremy Barkis, our business development officer. So the formal matters at this meeting relate to the report and accounts for the year to the 31st of March 2022. And with the consent of those shareholders present, I would like to take the notice of the meeting as set out on pages 77 to 78 of the report and accounts as read. Thank you. I will now ask that I take the report of Haynes Watts as set out on pages 36 to 41 of the report and accounts as read also. Thank you. The company shareholders have been able to submit questions in advance of this meeting, and you'll also have the opportunity to submit questions during the meeting via the live presentation, and we'll deal with those at the end of the formal business. I declare that the quorum required by the Articles of Association of the company is present, and that the meeting is therefore properly constituted. And on your screens, you should now see, hopefully, the ordinary and special resolutions being proposed. And after there has been a show of hands on each resolution, I'll advise you of the proxy count. So, Resolution 1. I now propose that the report of the directors and the audited accounts for the year ending 31st of March 2022, now submitted to this meeting, be approved and adopted. I'll ask Mr. Peter Moon to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
Those in favour? Those against? The resolution has been carried. The proxy vote was 42,200,098 shares in favour, 1,910 against, 19,395 abstentions. Resolution 2 is to declare and approve a final dividend of 0.25 pence per ordinary share for the financial year ending 31st of March 2022. And I'll ask Mr. Peter Moon again to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 42,202,008 in favour, no shares against, 19,395 abstentions. Resolution 3. I now propose resolution number 3, whereby Mr. Peter Moon be reappointed as a director of the company. And I will ask Mr. Jeremy Barkis to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. Proxy vote was 30,963,932 in favour, 28,719 against, and 11,228,752 abstentions. I now propose resolution number 4, whereby Mr. Ben Habib be reappointed as a director of the company. And I will again ask Mr. Jeremy Barkis to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 42,173,289 in favour, 28,719 against, 19,395 abstentions. I now propose resolution number 5, whereby the directors be authorised to reappoint Haynes Watts as auditors of the company to hold office from the conclusion of the meeting until the conclusion of the next general meeting of the company at which accounts are made. I will ask Mr. Peter Moon to second the proposal.
I have much pleasure in seconding the proposal.
Those in favour? Those against? I declare the resolution carried. The proxy vote was 42,201,508 in favour, 500 against, 19,395 abstentions. Resolution number 6. I now propose resolution number 6, whereby the directors are authorised to fix the remuneration of the auditors. And I will ask Mr. Peter Moon to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
Those in favour? Those against? I declare the resolution carried. The proxy vote was 42,202,008 shares in favour, no shares against, 19,395 abstentions. I now propose resolution number 7, as set out in full on page 77, which is an ordinary resolution and requires authority to authorise the directors to allot shares and grant rights to subscribe for or to convert any security into shares. I now propose that the directors be authorised to allot shares and or grant rights to subscribe for or to convert securities in accordance with the terms of resolution number 7. And I'd ask Mr. Jeremy Barkis to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 30,750,066 in favour, 11,451,942 against, with 19,395 abstentions. Now, resolution number 8. I believe that the result of the vote on resolution number 8 will be different if I call a poll. And I'm going to demand a poll to be taken as I'm entitled to do so under Article 74.1 of the Company's Articles of Association. I will mention that the proxy vote was 30,684,442 shares in favour, 11,514,666 shares against, with 22,295 abstentions. It will take some time to complete the poll procedure, and the final results of the voting on resolution number 8 will be announced through our regulatory information service as soon as reasonably practical. Each shareholder, proxy and corporate representative will be issued with a poll card. If there's anyone who thinks they should have a poll card but doesn't have one, please raise your hand. I should mention for those shareholders who have already lodged a proxy, they do not, of course, need to complete a poll card unless they want to change their vote. You have 3 options for each resolution. You can vote for the resolution, against the resolution, or you may withhold your vote. A vote withheld is not a vote in law and will not be counted in the calculation of the proportion of the votes for or against a resolution. For or against. Will you please complete your poll card by ticking the appropriate box, depending on how you wish to cast your vote. Please then sign the poll card and indicate that you've done so by raising your hand. The Company Secretary will then come round and collect your completed poll card. I now propose resolution number 8, as set out in full on page 77. It's a special resolution that requires authority to authorise the directors to disapply statutory preemption rights in respect of new allotments of shares and the sale of treasury shares. I now propose that the directors be authorised in accordance with the terms of resolution number 8, and I'd ask Mr. Jeremy Barkis to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
Will you please vote now? I declare the poll closed. I now propose resolution number 9 as set out in full on page 78, which is a special resolution and requires authority to authorise the directors to purchase on behalf of the company its own shares in accordance with the terms of resolution number 9. I'd ask Mr. Jeremy Marcus to second the proposal.
Mr. Chairman, I have much pleasure in seconding the proposal.
I put it to the meeting. Those in favour? Those against? I declare the resolution carried. The proxy vote was 42,030,532 in favour, 168,576 against, and 22,295 abstentions. So, ladies and gentlemen, that now concludes the formal part of the business of this meeting, and I will now like to read a statement which was released on the regulatory news service this morning. First Property Group PLC, the property fund manager and investor with operations in the United Kingdom and Central Europe, will hold its annual general meeting today at 12 noon. The AGM is being held online via Investor Meet Company and at the company's head office in London. The meeting will be chaired by Alistair Locke, Chairman of the Board, and at this meeting I will make the following statement. Since its financial year end on the 31st of March 2022, the group has leased additional space in its office building in Gdynia, Poland, increased its share in Blue Tower, Warsaw by 32% to 80%, and sold a property owned directly by the group in Tirani, Romania. Total funds under management at the 31st of August 2022, including properties owned directly by the group, amounted to £547.5 million, compared to £558.7 million at 31st of March 2022. The reduction of £11.2 million from the financial year end is due to the sale of 3 properties in the United Kingdom for £21.1 million by funds managed by First Property Asset Management Limited, and the sale of the group's directly owned warehouse in Tirani, Romania for £3.05 million. These sales were offset by inter alia the purchase by the group of a further 32% of Blue Tower, Warsaw for £7.2 million. Third-party funds under management, as at 31st of August 2022, amounted to £499.4 million, compared to £516.5 million at the 31st of March. Group cash, as at 21st of September 2022, amounted to £6.34 million. At the 31st of March 2022, this figure was 6.42 million. This equates to 5.75 pence per share, as compared to 5.81 pence per share at the 31st of March. That is the end of our AGM statement. And so we are now happy to answer any questions that have been submitted in advance or during the meeting. And I would also like to direct all of those present, either here or online, to our preliminary results presentation, which is available via the Investor Meet Company platform or on our website. And we will now answer your questions.
Thank you very much, Alistair. Our prelims were back in June, and I think just before I answer questions, perhaps it would be helpful for shareholders to have a brief synopsis of the group and our prospects, since June when we last reported. The principal changes in the group, as Alistair mentioned, include the sale of the warehouse in Tirani, which we sold for €3.6 million, having bought it for €2 million back in the depths of the credit crunch. So that produced a healthy profit after costs of about €1.3 million, just over £1 million, I think. We also bought another 32% of Blue Tower, which equated to 7,000 square meters of the building. 2,000 square meters of the 7,000 we bought was leased back to the vendor, a bank called PKO Bank, a local Polish bank. And the remaining 5,000 square meters is vacant, requires a new ventilation system and a complete upgrade before we can lease it. And we are now going through the process of that refit so that the property can be leased. The Warsaw office market, surprisingly, perhaps given all the negative news in the United Kingdom, is quite buoyant. The Polish economy is buoyant, inflation is up, but with high inflation has come virtually a complete stop to new development of offices in Warsaw, which has meant that you've got constrained supply with reasonably buoyant demand. And we're already beginning to see rents firm up in Warsaw. And if things continue as we expect them to, I would hope that the new investment we've made in Blue Tower will pay off extremely well. It's worth also bearing in mind that the purchase price that we paid of just over £7 million is phased in 7 payments over 6 years. So the property should, from an internal rate of return perspective, throw off a very good return for the group anyway, just as a result of that phasing. But we now own 80% of Blue Tower. It's our biggest asset in the group. Any shareholders who know Warsaw will know that it is a prime location. And after the works that we've done to the building so far and will continue to do to the space we've just bought, it'll be a first-class building. So I think with a fair wind and without the, as long as the economy doesn't implode, we should exit that property eventually extremely elegantly and satisfactorily. The other change since I last spoke to shareholders really revolves around refinancings that we've done in the group. So we refinanced a property in Cluj, which we only have a minority interest in, but that released some free cash to the group. We also are in the process of refinancing 3 other properties in Poland, which should free up another €2.5 million of capital for the group. And of course, we leased up a significant amount of space, as Alistair mentioned. I think you mentioned, Alistair, in our vacant property in Gdynia, which is now 4,000 square meters, or just over 40% of that building is now leased. It's 13,350 square meter building, and we have continued healthy demand for office space in it. So with the Polish economy doing relatively well, I would expect the Gdynia property to continue that trajectory of being let up and hopefully be fully leased in the next year and a half. It is a sizable amount of space that we still have, 9,000 square meters. The big upside to the group does in fact come from the leasing of vacant space that we already have in the group. The 5,000 square meters that we just bought in Blue Tower, the 9,000 square meters remaining in Gdynia. We also have a 23% interest in a company called Phoenix Limited, which owns an office park in Krakow, where 40,000 square meters of offices is vacant. And as we lease these properties up, we will naturally see First Property Group's profits rising, and on the back of our profits rising, obviously our cash reserves growing as well. Though having said that, in order to lease up property, they're often, and more often than not, you've got to do fit out for the tenants. So there will be some fit out capital expenditure which precedes the income generation that would then follow. Notwithstanding all the negativity in the press about the economy and so on, I remain bullish about Poland. Poland has done really very well when you think that it sits next door to Ukraine, and given what's been happening in Ukraine, it's taken an influx of 2.4 million refugees from Ukraine. It's rehoused them extremely effectively. They've become part of the Polish working force, these refugees, really almost seamlessly. And trading companies from Ukraine have also relocated to Poland. And naturally, there's been an influx of capital into Poland on the back of extra NATO spend in the region, as well as to help Poland with the effects of the Ukrainian war. So the war, if you like, for Poland has not been an adverse economic event. And part of the buoyancy of the Polish economy, stems back to that. So I see Poland even though it's suffering from high inflation and interest rates have gone up, as being a continued, not oasis, but certainly a continued good place to be invested. The UK has more challenging time ahead of it. I don't want to get drawn into what we all think of the budget, or what I think in particular, because you guys can ask questions, but I don't need to answer them. What I think of the budget, but I do welcome, I think, the general direction of deregulation and lower taxes, and that is something which, in the medium to long term, will, I'm sure, pay off for the United Kingdom. That's basically, I think, a reasonable update. Is there anything you'd like to add to that, Laura or Jeremy, that I've missed?
Perhaps that we're hoping to raise a new fund to decarbonise commercial property.
Yeah, I mean, of course, raising money at the moment is very challenging. The debt markets are closed, and with the closing of the debt markets, the equity markets are obviously also challenged. But we do have a plan to raise a new fund which would buy properties that are non-compliant with government legislation following our commitment to net zero. So government has legislated that by 2027, all commercial buildings in the United Kingdom should achieve an energy performance certificate rating of at least C, and it's mooted that by 2030, buildings will have to comply with an EPC rating of B. 80% of UK commercial property stock does not comply with those legislative moves. So the plan behind this new fund would be to buy best-in-class locations, but substandard buildings across the United Kingdom in secondary cities, dominate the location that we buy, upgrade the buildings, and become the de facto go-to buildings in those locations, and benefit naturally from an improvement in value as a result of that exercise. Whether or not we're able to raise the fund, of course, remains to be seen. As I mentioned, it's extremely challenging times. So having given you that brief update, perhaps we can just go straight to questions. There are a couple of pre-submitted questions. The first is, how is the current exchange rate affecting the company? Well, the principal exchange rate about which we fuss is the euro sterling exchange rate and the euro PLN exchange rate. If I deal with the latter first, the vast majority of properties in Poland are leased in euros, but of course the underlying exposure that tenants have is zlotys. So the fear, if you like, that we have is that if the zloty weakens dramatically against the euro, we might get tenants defaulting. Even though there's been big inflation in Poland, bigger than in Europe, actually the zloty is held pretty steady at around 4.7 zlotys to the euro, and I think it's about 4.75 today. So we see no stress in our portfolio as a result of zloty euro movement. And then as far as the euro sterling exchange rate is concerned, and that's relevant to us because properties in Poland trade in euros, and so we have to convert back to sterling when we consolidate those accounts into our books. There's been a marginal weakening of the pound since last year. So last year, on average, this euro sterling exchange rate was 1.17, and this year, at the moment, it's 1.12. But these exchange rates can move up and down quite a lot in quite a short period of time. So I wouldn't expect too much of a flattering of our profits coming from the euro sterling exchange rate. The next question is, are there any plans to convert office space into apartments? Well, that is something that we constantly monitor, particularly for UK properties. It's not that easy in Poland to do it. The Polish office buildings we own are simply too deep and too big to lend themselves to resi conversion. But we do own a number of buildings in our funds in the UK which would lend themselves to resi conversion, and that is always an option for exit. But there's no building at the moment which we're considering that particular conversion for. I think we should. So third question from Jaskirat S. I think we should invest in Dubai. There are many upcoming projects. Bizarrely, Dubai is a place we looked at about 14 years ago. Peter will remember. We considered Dubai, but Dubai is an incredibly volatile market. and it's very boom and bust. And when we looked at it, we were encouraged. But actually, I was delighted we didn't invest, because even though the oil price back when we were looking at it was, I think, pushing $200 a barrel, wasn't it? Do you remember?
Yeah.
And it makes today's price look like a walk in the park. And so we thought Dubai would do well on the back of that. But actually, shortly thereafter, the oil price collapsed. Dubai had real issues with its real estate market. So I don't think we'll be investing in Dubai in a huge hurry. I don't think there are any other questions online. I don't know if there are any questions in the room from my colleagues. This is your opportunity to ask the CEO an impertinent question in the public domain.
Yes,
Is there a net asset value per share?
Is there a net asset
Do you
value?
calculate the net asset value? Per
Yeah,
share?
we do, and we
Yes.
publish it as well.
Yeah, it is.
Yeah,
It's in the report
we
accounts.
we do it on two bases: on book value, and we hold our properties at the lower of value or cost. So our book value NAV, if you like, our published NAV, accounting NAV, is conservative in that we don't take revaluations upwards into account. We hold things at the lower of cost or market value, and I think our NAV on that basis is 42 pence a share.
Yeah, and on a market value basis, it's 47p per share compared to our current share price.
What's the current share price?
27.5 this morning.
They're a bargain.
On that metric, they are a
If
bargain.
you're an asset value investor.
Yeah,
Yeah.
they are. And Nick Naylor, our nomad, is sitting on your left. If you've got complaints about the share price, address them to Nick.
No pressure
But I mean, frankly speaking candidly, the stock market is not valuing First Property Group, in my view, adequately. We're a safe pair of hands. We've existed for 22 years. We've gone through many economic difficulty times when
dividend.
Hmm?
And you've always paid a dividend.
And I think we did. We cut. We did pay. We did pay a dividend
During the year,
we paid. Yeah, we
You've
cut the
always paid a
final.
dividend.
Yeah, during COVID, and we've reinstated the dividend now, and we will wish to increase the dividend as we lease up our properties.
Thank you.
Yeah. Well, thank you for that. That's kind of you. Thank you.
Just going back to the penultimate question about converting offices to residential, we have done it in the past. We raised a fund for clients of Willis Towers Watson, which generated an IRR net after our fees of 98% for the clients of Willis Towers Watson.
Yeah, so a new question's come in. Any update on your exposure in Romania? Well, we used to own an office block, a warehouse, and then we own a minority stake in another office block in Cluj. We've sold the warehouse. We still own an office block, 100% ownership in our name in Bucharest, which is worth about 4.5 million euros, and it's on the market to be sold. But we're not going to sell it at any price. It's a fantastic location, central Bucharest, follows the format of the typical kind of properties we own. So it's Class B, great location, produces a very healthy income of 330,000 euros net a year, roughly.
Mm-hmm.
So we're in no hurry to sell it. If we get a bid that we think makes sense, we will. In Cluj, we own 23% of an office block, the other 77% being owned by our third-party shareholders in the fund. And that is an office block that also is fully let, doing extremely well. Cluj is one of Romania's first-class cities, and we would sell it if we got the right bid, but we're not going to sell it unless we're satisfied with the price we're offered. I think that's about it.
That's it.
Yeah.
Well, if there's nothing else, thank you all very much for attending, and we look forward to seeing you in the next year. Thank you very much.
That's great. May I thank the board of First Property Group for your time this afternoon. Can I please ask attendees not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the board can better understand your views and expectations. This may take a few moments to be completed, but I'm sure will be greatly valued by the company. On behalf of the board of First Property Group PLC, we'd like to thank you for attending today's annual general meeting online, and may wish you all a very pleasant afternoon.